day, which is amazing. We focus strictly on real estate. So my two main criterias are funding of real estate, 1 to 4 units. Minimal loan amount is 75K on a fix and flip with a rehab or without a rehab. And with one particular lender, they go up to 2.2 million. What's really special about this lender is there's a couple caveats that really set them apart from anybody else. A couple of them are, for instance, if you have a client that is purchasing properties as an investment to fix and sell or fix and hold, and they have good credit and experience, we'll go to a 90% LTV on the purchase. And we also always do 100% of the rehab. What's very special about this company is when you're purchasing a property to do a fix and flip to sell it, or fix and flip to hold it as a rental income, we'll do a 12-month interest-only loan. And out of those 12 months, the company, the lender, actually bumps the LTV to cover 9 of the payments. The borrower will bring 3 interest-only payments to the closing table. So for the length of the loan, they do not have a payment. The second caveat that really sets us apart from everybody else is we advance our draws. So if you have a client that has good credit and experience, all their draws will be advanced, starting with the first one at the closing table. So I had a client that closed $1.05 million purchase in Chicago. They had a $500K rehab. Their first draw advance was $187,000. That offset their cash to close. They ended up bringing $350 to the closing table on a $1.05 million purchase. So the draws are advanced. We bump the LTV to, roll in 9 of the payments. And what's really special about them as well is we actually have an app. So throughout the length of the work that's being done, when you need to request, your second draw or your third draw, normally what happens is most lenders, you need to put in a request, and an inspector comes out, reviews everything that you've done. It costs you $199 every time you need the inspector out. With us, you take pictures as you go. You upload them through our app. You do not pay an inspection fee. If you just upload as you do the work, the next draw you need, as long as we verify through the pictures that everything is done, that next wire is going out within 48 hours. If you finish the project early, let's just say you had a 12-month interest-only loan and you finished it in 6, those payments are immediately credited back, and that just brings your payoff, lower. So, and what I love about them is they're quick. We can close within 7 to 10 days of appraisal and title. I find right now appraisals are taking a little bit longer. So most of our closings are taking about 2 to 3 weeks. But the great thing, again, too, is all their caveats, and it's a business purpose loan. So what that means is your borrower does not need to show tax returns, income, anything like that. We do check their credit. They need to be credit worthy, but we don't report against their credit. Everything is against the business. So we'll collect the EIN, the entity docs, in the GC docs if there's a rehab involved. So again, it's about the payments being rolled in, the high LTV, the advanced draws that they do, and the app that they have. So I've been really targeting any investors through social media or Craigslist, any investors that are looking for lenders that are strictly focusing on 1 to 4 units. 75K to 2.2 million and are looking to close quickly. And that's, pretty much it for that. And I have some new construction as well, but I'll discuss that after.
Well, welcome, Tracy. Glad you could make it. Thank you very much, Michelle. That was a great presentation. I'm so glad. No, I'm only kidding. Um, I would like to just review
Mhm,
um, what we said. Now, you said we go up to 90% LTV with good credit. What is
mhm.
good credit?
So we like to see, obviously 650 or better. We have, I have done people that have a 620 FICO, but they're going to be a lower LTV. So if you have a borrower that is 660, and has experience, they have personally purchased and sold or purchased and held for rentals 10 or more properties within the past 3 years, they qualify for the 90%.
Well, that kicks me out. I mean, I've done 26 properties in Myrtle Beach. I've done 10 properties right here in North Carolina, where I'm at currently. But that one yesterday, that was a while ago. So that makes me a newbie.
So there's certain exceptions that can be made if somebody kind of stepped away from the business for a little bit. If we can show a good track record, they do make exceptions, which is a wonderful thing. I also did forget to say as well, term sheets and proof of funds are issued very quickly. So if you had a client, Frank, and you put in the application, and let's just say they wanted to see what the numbers look like before they put in an offer. Term sheets are issued within 24 to 48 hours, and a proof of funds letter can be provided if they need it to put it with the offer.
So a lot of real estate agents now are asking for a proof of funds letter before they let you get in their car and start showing properties to you. If we have people that are pre-qualified, would you be able to give us a proof of funds if
So our proof of funds letters is based off the asset. So you'd have to have a client that is looking at 101 Main Street, right? So they're looking at 101 Main Street and they're going to go see it tomorrow. They know enough about the property and they're really serious about, they think they're going to put in an offer. There would have to be an application. Now, the applications, Frank, and you saw it, we do not ask for any personal information. All applications are based off the information that is provided. So, for instance, if you put in the application that the client has a 700 credit score, they're purchasing the property for 100 grand. They're going to do a rehab for 50 grand. And then at the end of the day, the after repair value is going to be 400K. I'm going to issue the term sheet based off those numbers. Now, if your client comes back and has a 602 credit after they said they were a 700, things obviously could change in regards to the LTV. But each proof of funds letter has to have a property address attached to it. We do not issue a blanket POF. That way, when the realtor calls up and says, hey, Joe Customer LLC gave me a POF letter for 101 Main Street, the purchase price is, they're approved for 300K, but now they put in an offer of 325 to outbid the other client. That way we can issue a new one. They call corporate and then somebody answers them and says, oh, yeah, absolutely. Give me 5 minutes. We'll rerun the numbers and send you a new POF. So it's based on the property.
well, that makes it an asset-based loan, which is wonderful. And the I think I think getting around or getting over the proof of funds letter should be a piece of cake, easy to do.
Mhm.
Now, will you will your company allow any? That would get your thoughts together, Frank. we're talking about anywhere from a 50 to a 90% LTV based on their credit. So if they have very good credit, which we figured is 650, north of 650,
Okay.
they get very good credit, they're going to get 90%. Will the lender allow seller a seller's second, or will the
No.
lender allow them to come up with the 10% other than from their bank account?
Yep. So we don't even check that. Like, that's the thing about the business purpose. We're not asking for reserves or bank statements or anything like that. One, we definitely do
Whoa,
allow.
whoa, whoa, whoa. No reserves and no bank statements?
No, not at all. No
Oh
tax
my God, we
returns, no
died and
bank
went to heaven.
statements. No, and this is, we have like really great rates. We're private. We're not hard. We're not, bank. But what's wonderful about working with us is it's business purpose. It's just quicker. You don't need to show your debt to income ratio, pay stubs, tax returns, bank accounts, anything like that, which is wonderful. We, however, do not allow any seller seconds, but we do allow 6% seller concessions, but no sellers doing that now. The market is such a seller's market that, it's just not happening lately. But yes, we do. And I do want to reiterate with the good credit and 90% LTV, that's also an experience requirement. They need to have experience to get to the 90%. If they have a 700 FICO and no experience, they're going to be at an 80% LTV. The
Which isn't shabby.
90%,
That's not
no,
shabby either.
no, the 90% is experienced and credit worthiness. And again, we check credit once. So your client, we issue a term sheet, they love the terms, they sign off on it, send it back. My processing department will send an email for a credit authorization. So we're not going to pull credit first. Like, we will send out an email and your client will have to, click in DocuSign saying, yes, it's okay for you to pull my credit. And the wonderful thing is too, is once they're in the system, they're in the system. So Joe Customer does one deal, right? He gave us everything, his LLC docs, his GC information, everything we need. We closed that deal successfully. Now Joe Customer comes back 3 weeks later, he finds another property. All we need now is the purchase and sale and the rehab budget for that other property. We've already verified him. I have clients that consistently come back. I deal with investors. This is their business. That's what they do. They buy and they rehab and flip properties. So if they come back to us, they close on the first deal. We won't even check their credit until like 90 days later. So they could have multiple deals going within a 90-day period. We don't pull credit again. If they come back to us with a new deal on day 91, we're going to do a soft pull. So we do one hard pull, and as they continue to come back to us, because they normally do, it's about, repeat business, we'll do a soft pull from there.
Okay. You brought up a great point. How about how many properties can we do at one time or simultaneously or consecutively?
So I have clients that are doing, 4, 5, 6 properties at a time. And again, they're experienced borrowers, but I have a client that they just started this business. They're buying 2 properties. They're holding them for rental income. So we have some phenomenal interest rates too. If you have a client that just wants to buy an investment property and there's no rehab involved, I just closed somebody at a 4.625 on an investment property, business purpose, a 4.625 30-year fixed.
Wow.
No tax returns, no bank statements, nothing like that.
Wow.
I know, it's phenomenal.
4.625 APR.
4.625 for a 30-year fixed.
30-year fixed.
Mm-hmm. Now,
Fixed.
again, keep in mind, these are always non-owner occupied. You can't have somebody put in an application that's gonna, move in. We only do non-owner occupied.
Yes, yes, we understand that. That's our bread and butter. That's what we do. I get it. Phew, but that in and of itself, I don't want to ask any more questions. Okay, let's get back up to something that was completely unusual to my group. So they're not they a lot of them may not even understand what you were talking about. Um, you had you talked about we're going to have interest only payments for 12 months. Where we totally get that?
Mhm.
And you're going to take 9 payments and roll them into the loan
Mhm.
so that when now those are interest only payments. So
Yep.
we're going to take 9 interest only payments. We're going to roll them into the loan, and they have to come to the closing table with only 3
Right.
interest only payments. And then there are no payments for the rest of the loan until you close.
That is correct. So it's a 12-month loan for a fix with and flip with the rehab budget. It's a 12-month loan. So they're bringing 3 to the closing table. We're bumping the LTV and covering 9. Those payments sit in escrow with their title or closing attorney. We pull the payments every month. And let's just say your client finishes 6 months. They're 6 months ahead of schedule. The 6 months that are sitting with their escrow title attorney will be credited immediately back to the payoff. So if they have 30,000 in payments sitting with the attorney, at that point their payoff is 30,000 less.
You should be jumping up and down, Tracy. This is unbelievable. This, this is
I
unbelievable.
I understand what she's saying. That's like, oh, happy days, really.
Yeah.
Oh, happy days.
And
Yeah.
again, we're quick. Like what I love about the lender is they're quick. I mean, we get a term sheet back, and then right away it's okay. Now get me the rehab budget in the experience sheet in the purchase and sale so we can get the appraisal ordered. So that is another thing I did want to let everybody know is out of pocket costs. There are 2 fees that are out of pocket. The lender charges an $899 underwriting fee. Okay, so out of that $899, they charge $199 upfront. It can be paid on a credit card, and the appraisal fee is paid out of pocket. We order all appraisals through an AMC, which is an appraisal management company. All banks and lenders are required to do so now. And the AMC is the one that sends out the email to the client so they can pay for it with their credit card. And then at that point, it's issued to an appraiser. So those are the 2 things that are out of pocket. Again, anybody in real estate always knows you always pay for your own appraisal. It's never usually rolled into any loan. And that $199 out of the $899, that is paid up front, but it can be paid on a credit card and it's, credited back to you at close. So you're paying that underwriting fee at the closing table. So out of the $899, it's less $199.
Okay. Boy, that could have been complicated, but I get it. I get it. So the $199 fee goes to one credit card, and the 600 fee goes to the appraisal. No,
Appraisals can be
700.
more or less, Frank. So
Yeah,
depending
more or
on
less. Yeah, I
what they're
understand.
doing, some areas they're 300, some areas they're 900 right now. I live in Boston. Appraisals are going for 750 right now, but I have a client that's in Ohio and his appraisal was 299. So
Wow.
it just depends where you are. And
Okay.
we have nothing to do with that. That's all done via the AMC.
Okay. Well, that is absolutely fantastic. putting it on a credit card makes it a whole lot easier for folks
Exactly.
to work with it. Okay. Um, the term sheet. You talked about getting the term sheet in just a few days. Tell me about that.
So what I love too about this, I love a lot of things about this company. I've been with them for a couple of years now. The term sheets is a half a page and it's all the numbers. It looks like a HUD-1 settlement statement. We do not believe in 13 pages of fluff. Who needs it? All you want to know is what your interest rate is, what you're paying for origination, and how much cash you need to bring to the closing table. That's it. So it's a half a page and it goes through every single number. It walks you through everything. And if on the term sheet, if I'm telling you that your client is bringing $30,733.01 to the closing table, I guarantee you they're going to end up bringing a little bit less than that 37,000, whatever number I put. So our term sheets are spot on. We do estimate a little bit high for taxes and insurance. And that's just basically, for the purpose of, we don't know what taxes and insurance are in every single state. So term sheets are really spot on. And again, it just walks you through all the numbers and that's it.
So now you're calling it a term sheet. Am I to am I to assume that that's the same as an LOI?
Yeah, our term sheets are pretty much a conditional loan approval based on the numbers, a letter of intent to move forward. Correct.
Okay. And I'm taking notes as we go, everyone. So, but I'm also recording this. Um, draw in advance. Now, this is utterly unbelievable. Draw in advance. Every single deal that I've ever done, the people that my borrower had to pay for the rehab out of his own pocket or out of the reserves that we set up for them, and then after an inspection period, they would get reimbursed for the money. You're
Mhm.
not talking about that at all. You're talking about something completely different. Could you?
Now, can I interject real quick? So, advanced draws are for clients that have experience. So, if you have a brand new borrower that's just getting into this business, has never even done one deal, it will be on a reimbursed schedule for the first draw. So just so that we're perfectly clear with that, because I want to make sure if anyone's going to market this, that they're marketing it correctly. The client has to have experience purchasing and holding properties or purchasing, flipping, and selling properties. So a client with no experience would be on a reimbursement schedule. And a client that does have, and I do want to let you know this as well, if a client has experience and they're doing like a huge build, they're going to knock it down, let's just say to the foundation, right? And build something completely different. We will need the client to give us prelim plans and drawings prior to close, or the very first draw will be for them to get the plans and drawings.
Okay. All right. So now let me reframe that question.
Mhm.
We have an experienced borrower. This experienced borrower has three deals under his belt in the last 2 years,
Mhm.
and he's showing a profit with everything that he does. He has good credit, and he gets the fourth deal, and you fund it for him, and now they want to take a draw to uh, do some of the work that they have to do on the rehab. How does your company handle the draw?
So if they're on an advanced schedule, the very first draw will be issued at the closing table. So let me kind of start with some round numbers, and then it might make it a little bit easier. Okay. Let's just say your client's buying $100,000 property. So he would have to bring 10,000, right, to the
Okay.
closing table, because that would be the 10% that we're not covering. Let's call closing costs 10 grand. So now your borrower has to bring 20 grand to the closing table to buy 1 Main Street. but he also has a rehab. His rehab is 100K. On an advanced draw schedule at the closing table, we're giving 20 to 25% of that rehab budget. So remember, now your client's bringing 20 grand to the table, but now we're doing his first draw and we're issuing 25,000 at the closing table. So now your client's walking away with $5,000 after close to start the work. So it just, an advanced draw offsets the cash that you bring to close. Majority of the investors, have the money in their account to buy the property. It just makes it a little bit easier. They don't have to pull it out, wire it, get a cashier's check. If anybody's on either an advanced or a reimbursement schedule after the closing, again, all you're doing is, in this day and age, everybody has an iPhone, an iPad. You're going to download the app. You're going to take pictures as you go. We're working on a draw schedule. So we know exactly when, what your first set of work plans are. So working on that schedule, we know, okay, so-and-so needs 20,000 for drywall, for this, for that. So they just take pictures as they go. They upload it to us via the app, and then they request the next draw. All that information will be given in the closing package, so they know where to upload, what app to download, and who to email to request the next draw.
All right. Well, that makes perfectly good sense. We want to keep it simple, though. We're not going to get it. We're not going to get it too complicated. I'll put an asterisk next to that and see below, and we'll put 500 provisos. No, we're going to keep it simple, but we want to keep it honest but simple. All right. So now the app is how they're going to get their advances by simply finishing the work, taking a picture, show the work is done, and the picture. Is there any fee for an inspector to come out and inspect the job that they've just done?
No, not if you're using the app. If you choose to go the inspector route, you make the appointment. It's $199 every time.
Everyone's gonna use the app. I guarantee. They take a picture and get the money. That's what they're gonna do. How about the BPO or the appraisal? What about that?
What do you mean?
Are you going to order a BPO? Or are you going to order an appraisal?
No, we're going to order a full appraisal.
Okay, a full appraisal. And of course, you're going to take care of that.
Yeah, that has nothing to do with the client. We order the appraisal through the AMC.
So Easy Financial doesn't have to be bothered with it.
No, you guys don't do anything. We open title and escrow. We get all that information from the client. So in regards to the appraisal, we order that, they send a link, they pay for it, and then the appraisal is scheduled. Title, attorney, whoever your client wants to use, will open one. So I ask for the contact information for the attorney or title company. And then I also ask for the contact information for their insurance company, because we're going to need an insurance policy and a builder's risk policy if they're doing a rehab. So any attorney or title company they want will open with. And also in regards to the insurance, I have a phenomenal insurance company I work with. So if your client, is unhappy with their quote they're getting from their company, I have somebody that will beat any quote any day.
Okay, great. All right. Now you mentioned that the borrower is actually borrowing the money, not personally, but in his business name. Elaborate on that, please.
I'm sorry, say that again, Frank.
You said that the borrower was borrowing the money or buying the house in the business name. It was a business entity for business purposes. Explain the difference between buying it personally and buying it in your LLC.
Yeah, so in your LLC, it's just everything, title, insurance, everything is held against your company and not your personal. We're only checking credit, so we're not reporting. So, Joe customer gives us his social, we pull credit, we see it's good. We're not reporting the mortgage to his credit. It's all against his entity. So, we will report for business credit, but not to the personal credit.
So that's a great thing, because that means if the man wants to buy a house for himself to live in under a different contract with a different lender,
Yeah,
it,
he
it
can.
doesn't reflect against his debt to income.
No, not at all. And again, that for us, that's not even anything that we look at. GTI, things like that, that's absolutely irrelevant to us.
How about debt service coverage ratio?
Well, if they're getting into a 30-year fix, then yeah, we have DSCR, absolutely. But if that's only on like a long-term refinance.
Okay, no
Hey,
problem.
Frank, can I, because I know we're still talking, can I quickly disconnect from the computer and log back in through Zoom through my phone? Because I have an appointment in 20 minutes. I'm going to finish doing the call while I'm driving.
Okay,
I just want to log off for 1 second and log
Okay.
right back on. Is that okay?
yeah, that's fine. We could
Yeah.
we could wrap it up now, or you can do that. Whatever you want to do.
Whatever you want. I'm so sorry. I thought we were going to talk for about 30 minutes, and I'm glad that, the call's going well. I do have time. If you want, we can continue. I just need to switch it over to my cell.
Well, go ahead and switch it to your cell. I think we're finished, but go ahead and switch it
Well,
to
I
your
still
cell.
have two questions actually, real quick.
Yeah, go
But
ahead.
When
I'll,
when you
I'll
switch, when you
answer the
switch,
question.
Wait, let her switch over to her cell.
Yeah, hold
that's
on.
what I'm doing.
I'm disconnecting. Give me 1 second, guys. How do I disconnect?
I thought we lost you, Stuart.
No, I've been here listening the whole time.
All right. Well, guys, this is a fantastic tool. Wait until you hear the no sheet. No taxes, no income verification, no personal credit reported.
Hi, I'm here, Frank. I'm so sorry. Can you hear me okay?
We hear you just fine.
Okay,
Hey, and
beautiful.
that's
So
no problem whatsoever. Hey, so what is the lowest purchase price you can have on a property?
So keep in mind, our minimum loan amount is 75K. I always try to be 100K and above, because if they're a new borrower, they're going to be at like 80% LTV. So for me personally, I always try to be at least 100K. If you have someone that's like 95, yeah, it's going to work. But anything less than that, it's not. They don't do exceptions at all. And especially, since COVID.
I understand. However, I said purchase price, not loan amount.
So again, you want to be over 100K.
Over 100K on purchase price?
So that when you bring, if it's at 80%, then you got to bring 20% to the table. So if it was $100,000 and it was 80%, that means you brought $20,000 to the table.
Okay, Frank, I'm following that.
Okay.
I'm following that, no problem. I'm differentiating between loan amount, which is the purchase price plus the rehab.
So
or
purchase
price.
We always do 100% of the rehab. So just think about the purchase price. Always do a purchase price over 100,000, 100,000 or more.
So the 75K is based off purchase price. I got it.
Correct.
Now. That's what I was clarifying. I want to make sure to clarify that because everybody gets that different.
Yeah, absolutely.
Okay. Well, you know what?
I think
Anyone else have any questions? Because I think I'm going to let Michelle go. She's got a number of other products. This is just one of the products that she has. And she's already blown me away with this product. And I can't wait to see the other products. She does have ground up construction. Could you just run through a laundry list of what you do have?
Yep, so we do ground up construction. LTV would be anywhere between 50 to 65%. Again, the same caveats like business purpose. With ground up construction, you do need experience. That's a must. You can't just, do 10 flips and then want to jump into ground up construction. They do want to see experience with that. And then also, we can do mixed use. It's not the same LTV. It's in an 80, but again, it's business purpose.
Okay. And
So you can do commercial as well then?
So yeah, it depends on what it is. Like I just got somebody that wanted to buy an automotive repair shop. That we don't do. If we're doing commercial and it's, storefronts, then yes, we can do that.
Okay. Apartment complexes?
Absolutely.
Okay. So above 4 units, we can still do it?
Absolutely. Yep. So my
Good.
main lender is 1 to 4 units. My other lender is 4 plus.
Good. Okay. Fantastic.
Okay. Michelle, listen, on such short notice, I appreciate you. You're a real soldier. Thank you very much for the time. You go ahead and get ready for your next appointment, and we'll start.
Yeah, it's all good.
Hey,
And-
Frank.
Yes.
So just let everyone know if they have clients, just, have them call you so you can put in the application.
Yes.
And then, we can move forward that way. Or any questions, they can set up another call and we can all get on and I can walk them through what I just walked you, everyone else through.
Okay. Well, we may do that, but the most important people are on the call right now anyway. So we'll have another little training call that we want to do, how Easy Financial wants to set it up and run with it. And then we'll be the ones who'll be submitting it. And they won't be coming from the customers and they won't be coming from the sales team. All right. With that, I'm going to say
Michelle,
thank you very much.
Oh, you are so welcome. Again, if you want to do another call, Frank, like in a couple days, and if anyone else wants, has questions, I am more than happy. I will make sure that I set aside more than an hour. Okay.
Thanks again.
Thank you, Michelle, for your time.
Okay.
Thank you.
Thank
All
you,
right.
everyone.
Thank you. God bless. Bye
Bye.
now.
Frank, I'll call you back when I get back to the office.
Okay.